Your roadmap to the latest in auto. Welcome to Highway Herald. The automotive trade war is intensifying, and Canada's latest move could reshape North America's car market. With the US pushing aggressive trade policies, Canada is exploring new alliances, possibly with the European Union. Is this a major realignment or just a high-stakes bluff? From Tesla's uncertain future to soaring American car prices, the potential impact is massive. Let's dive into the 6 key ways Canada's bold trade maneuver could disrupt the US auto industry. Buckle up. It's going to be a wild ride. Number 6. Retaliation in motion. Canada's tariff threat aims at Tesla. Canada isn't taking US tariff threats lying down. In a move that's both strategic and symbolic, officials have floated the idea of imposing a 100% tariff on Tesla vehicles. This isn't just about economic retaliation. It's a direct hit on one of America's most influential automakers. Tesla enjoys a significant following in Canada, and a tariff of this magnitude would make its vehicles prohibitively expensive for many Canadian consumers. But the impact doesn't stop at sticker shock. Tesla has been securing vital battery materials, lithium and nickel, from Canada, critical elements for its EV production. If tensions escalate, Canada could restrict Tesla's access to these essential resources, forcing the company to seek costlier alternatives. Given Tesla's history of volatile stock performance, even the threat of such a tariff could send ripples through investor confidence and shake the company's market valuation. Number 5. An automotive domino effect. How US automakers could suffer. For decades, the US and Canada have shared a deeply integrated automotive network, with Canadian factories supplying crucial components to American automakers. If the US enforces a 100% tariff on Canadian exports, it could cripple the supply chain, driving up production costs for General Motors, Ford, and Stellantis. North American auto manufacturing relies on a complex cross-border system, where parts move between countries multiple times before final assembly. Disrupting this process would force automakers to either absorb major losses or pass higher costs onto consumers, raising vehicle prices. The consequences could be severe: factory closures, job losses, and an industry-wide slowdown. This standoff threatens not just automakers, but entire communities dependent on the sector. With economic stakes this high, the future of North American auto trade hangs in the balance, leaving both governments and manufacturers with difficult decisions ahead. Number 4. European invasion. How Canada's pivot could benefit European automakers. If Canada fully commits to a trade shift toward the European Union, it could be a game changer for European automakers. Brands like Volkswagen, BMW, and Mercedes-Benz would be in a prime position to expand their market presence in Canada, leveraging the comprehensive economic and trade agreement to their advantage. Meanwhile, American automakers, historically dominant in Canada, could face steep competition. Unlike the United States, which imposes high tariffs, the EU offers a more favorable trade environment for Canadian imports. This shift could significantly weaken American manufacturers' foothold in the Canadian market. Additionally, with lower tariffs and EV-friendly policies, European electric vehicles may become a more attractive option for Canadian consumers, intensifying competition for US automakers. If this trend accelerates, Canada's pivot to European trade could reshape the EV landscape, forcing American manufacturers to adapt, or risk losing their market share in one of their most important trading partners. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore number 3. US consumer prices set to surge amid trade war. If the US enforces steep tariffs on Canadian imports and Canada retaliates, American consumers will bear the financial burden through soaring vehicle prices. The main culprit? A disrupted supply chain. Canada is a key supplier of aluminum, steel, and other vital materials for US automotive production. A 100% tariff on these imports would significantly inflate manufacturing costs, leaving automakers with 2 choices: absorb massive losses or pass the costs on to buyers. Beyond price hikes, a Canadian shift toward European trade could limit affordable vehicle options for US consumers, particularly in the electric vehicle sector. Canada provides essential battery materials like nickel and lithium. If redirected to Europe, American automakers would struggle with costlier alternatives, driving up EV prices. The impact wouldn't stop at cars. Industries relying on steel and aluminum, like construction and consumer electronics, would feel the strain. Rising material costs could fuel inflation, tightening household budgets even further. Number 2. The US auto industry risks losing a key ally. The once stable US-Canada trade partnership is under immense pressure. For decades, the two nations have maintained an integrated supply chain crucial to North American automotive manufacturing. But today, that alliance is at risk of unraveling. If Canada forges stronger ties with the European Union, North America's auto production ecosystem could face a serious realignment. Tensions escalated in early 2025 when the US government imposed a 25% tariff on Canadian and Mexican auto imports, citing national security and trade imbalances. Canada swiftly countered with a $155 billion retaliatory tariff package, hitting key American exports and signaling a no-compromise stance. With Canada actively exploring alternatives like CETA, Comprehensive Economic and Trade Agreement, with Europe, the US could find itself losing influence in the global auto market. While a complete trade severance is unlikely, the long-term implications of a weakened US-Canada alliance could leave American automakers scrambling to navigate a fragmented North American market. Number 1. A bluff or a long-term trade shift? The critical question remains, is Canada's trade pivot a temporary bargaining tactic or the start of a fundamental shift in strategy? Given the deep interdependence between the US and Canadian auto industries, the outcome could reshape North America's automotive landscape for years to come. Experts remain divided. Some see Canada's move as a calculated effort to pressure the US into reconsidering its protectionist stance. Others argue that, in today's shifting global economy, Canada is genuinely committed to diversifying its trade partnerships, even at the expense of its long-standing reliance on the US. If Canada fully integrates with Europe's automotive sector, US automakers could face severe consequences: rising production costs, heightened competition, and market instability. The question now is whether this trade war will de-escalate or trigger lasting changes in North American auto manufacturing. The stakes couldn't be higher. The verdict: a defining crossroad for North American auto trade. Canada's latest trade maneuver sends a strong signal. It refuses to be pressured by US tariffs. Whether this is a strategic bluff or the start of a long-term shift, the impact on the American auto industry is undeniable. Major automakers like Tesla, General Motors, and Ford are at the center of this economic standoff, and consumers on both sides of the border could soon face the consequences: rising vehicle prices, supply chain disruptions, and potential job losses. The stakes are monumental. Canada's potential pivot toward European trade could shake the foundation of North America's integrated auto industry. With tariffs and retaliatory measures escalating, US automakers may soon struggle to compete in a shifting global market. What's next for North American auto trade? Will the US adapt its policies to protect its long-standing alliance with Canada, or are we witnessing a permanent industry shift? The stakes are high, and the impact could be felt by automakers and consumers alike. What do you think? Is this just a negotiation tactic, or the start of a major trade realignment? Share your thoughts in the comments. And don't forget, subscribe to Highway Herald for the latest updates on this evolving automotive showdown. Stay informed, stay ahead,